JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 31st of August of 2022. So yeah guys, welcome everyone. Welcome to the last summer calendar day. So welcome everyone. Today's Wednesday. So I hope you all had a fantastic summer. If the summer is not ending for some, well, great for you. So yeah guys, before we jump into the charts here, as always, let's quickly have a read through our risk disclaimer. So yep, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, a quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our jfdbrokers.com website, which you can check out for more information about us. Now then guys, jumping into the chart, so I do have a bunch of instruments I really gonna want to go through. Through some of them I'm gonna fly just quickly, just to see, because I've talked already about them, and in a way just wanted to see where they are at. Looking at this picture here, Nikkei 225, so continues to trade below this highlighted territory. Everything's still in line with the analysis, because what I was saying previously, that as long as we stay below the highlighted area, then yeah, we'll go lower. I'll go towards that 200-day EMA or that 100-day EMA. So at the moment we seem to be on the right track. If we do push and stay above this highlighted zone, and specifically maybe above this, actually this is where I would like to maybe adjust the upper level here a little bit. I think that previously I had this one, but now it can actually mark this one right there. So this little area, the 28,282 level. Oh, very nice, beautiful number here. 28282. So yep, if we do push through that 28282 level, then yes, I'll start aiming for the upside again, because we would be placed back above all of the EMAs here on our daily chart. Shanghai Composite, guys, very quickly on that one. We did decline initially. We're still trading. We still have around 50 something minutes left of trading here, so everything's okay here. The Chinese manufacturing came out today. The manufacturing PMI number came out, which showed up better than the previous number, and the forecast came out at 49.4, which is great. However, still in contraction, because everything what's below 50, that's in contraction mode. Everything what's in above 50, which is below 50, contraction mode, above 50, expansion. So yeah, Chinese composite PMI number came out. Yeah, that one failed to kind of beat the forecast, came out lower. The forecast was already a little bit on the lower side, but yeah, that came out at 51.7 against the 52.3 forecast. So yeah, that didn't really sparkle very well with the investors. However, as you can see, the bulls are trying to keep this one afloat. They're trying to keep this above this 3,200 zone, the one that I talked about previously. So in a way, everything's kind of still okay-ish. But if we do fall again below that 3,200 zone, well, I'll aim for the for the downside, guys. Now, Hong Kong's Seng index, also quite interesting, but the thing is here is that we got a very beautiful reversal here back to the upside. And as I said before to you, this whole activity around here could be interesting, but if you're not really comfortable with that, I will totally understand you, because again, I'm not really comfortable with that myself. So I would prefer to wait for a push back above the 20,216 territory, somewhere around here, in order to go higher, in order to go for some higher levels, at least in the short run. For the downside, I need to see a drop somewhere below this 19,179 territory, and then we could go, yeah, we could go a little bit further south. Now, jumping into ASX 200, Australian index. So here we have an index which reversed to the downside. Of course, it reacted to the negativity from the U.S. That was received in the U.S. yesterday. So it did drop lower, but once again, the lower side of the range, and probably this is where the point I've reached that point where I'm actually going to mark this as a range, because at the moment so far it is working quite nice here and working as a nice beautiful range. So let me just capture the upper side here, roughly around here. So yeah, if you're looking for some higher levels, then yes, a push above that 7,117 territory would be needed for the downside. Now, this is the further we go to the right, the closer we get to this upside line. So in other words, if you're looking for some lower levels, then probably a break of this upside line would be ideal, and then yeah, we could go a little bit further south, you know. But at the moment, yeah, it's a bit of a tricky one. I would say if you're looking, like I said, for some higher levels, then wait for a break through the upper side of the range. For the downside, if we do drop and stay below the lower side of the range, given that we're very close to this upside line, maybe it would be useful actually to wait for a break of this upside line in order to go lower. Now, the German index, DAX, beautiful spike yesterday to the upside initially, and then, yep, we drifted back to the downside. We moved back below that psychological 13,000 mark. We stayed below it. Now, looking at the cash index right now, we'll see that yes, the cash index is it is pushing back above that 13,000 mark, and most importantly, it's currently sitting near that 13,042 territory, which I spoke about previously. However, looking at this picture, I think that we can now start getting rid of these levels, because these don't stopped carrying any huge, let's say, weight. So yep, and that's why, I mean, we can get rid of them. We can take the more recent levels here, for example, the 13,085. But the fact that we are above the psychological 13,000 mark, that of course, yes, that attracts more buyers. But can we sustain that? Can we remain above that 13,000 mark? Well, to be honest, I would say let's be very careful. Again, I will keep an eye. Now I will keep an eye on this 13,085 level. Now, previously I talked about that 13,042, which, I mean, in a way I can bring it back here to the chart just for the sake of it. So this 13,042 level, yes, we're currently sitting at around it. But if we somehow struggle to push above this 13,085 level, then, well, I mean, we could go back down. However, I would prefer, for the downside, I would prefer to wait for a drop below the 12,827 territory in order to go lower. At the moment, I am just observing this one. This is not my favorite spot to be in, and that's why I will just kind of observe, and I'll wait for, you know, a better confirmation here, and then I'll do something about it. But at this point, I'm just observing this one. Now, the Dow Jones Industrial Average, guys. A while ago, judging by the arrows that have shifted here a little bit more to the left, or in other words, we surpassed the arrows here, we can see that the targets have been met. So what I previously talked about, I said that, look, if we drop below the 32,387, my next target is the 31,705, which we managed to reach. Perfect, good, mission accomplished. Now what's next? Now what we have here is this upside line taken from the low of the 17th of June. Now this upside line is a little bit on the tentative side, so yeah, I would say it's not the most kind of accurate, not accurate, but most you know, the most carrying weight. There we go. Again, I'll repeat myself on that one, but I mean that's probably the most important line here. But nevertheless, it might, you know, it might evolve into something bigger, as it always does. I mean, it always starts off with a tentative line, but then actually, you know, if we do test it and do rebound from it, then yeah, that starts carrying more weight. At the moment, I would say this way: if you're looking for some lower levels, then wait for a drop, another drop below this 31,705 zone. Now, if we take a look at the cash index right now, we'll see that the index is trading around 31,958 zone. So basically, nicely above this hurdle, near the psychological 32,000 mark. Can it remain below that level? Well, let's wait and see. One thing I wanted to show you from the very short-term perspective, what you can do here is keep your eyes on the low of the 29th of August, and that's the low of Monday. If we continue to trade somehow below this hurdle, below that 31,973 territory, another decline here could be possible. So what I'm going to do here is I'm going to draw something like this. Now, we could see, like I said, we could see a retracement, a hold up near this 31,972. If we get a hold up here, then yeah, another decline could be possible, and we could go for that upside line. Now, in terms of the upside, I would prefer to wait for a push back above, somewhere above this 32,387 level, just to be a little bit more on the safe side. However, even then, you know, it wouldn't be sort out for the bulls, because basically we would have this downside line which could be in play. So if you're looking for something a little bit more reassuring, then a break of this downside line could be a better option. And if you really want to be very conservatively cautious, then a break above this barrier could do the trick for more buyers. So in other words, at the moment, 32,387, that's what I would be looking for the upside initially. At the moment, I want to see if this, let's say for today, this 31,973 territory will provide resistance. If it will, then a further decline could be possible. Nasdaq 100, guys. Oh, and by the way, I can see in the chat room there, Evu. Good morning to you too. Good morning to everybody else as well who's joining in. I hope everybody's having a wonderful start of last summer day calendar, of course. Yeah. Anyway, coming back to the Nasdaq 100. So Nasdaq, mission accomplished, guys. My target has been reached, the 12,259. I talked about that area, and boom, there we go. We've managed to reach that, and what's interesting here as well is that basically I think, let me just double check this. Yeah, there we go. We also reached this upside line. So I have it on my other chart here, but forgot to draw it on this one. So yeah. But anyway, this is the level I was aiming for. Currently, we're on the cash index, we're seeing a bit of a retracement, so we're bouncing back up. Now, this arrow has to be adjusted, so let me just have a look at this. So, if you're looking for some lower levels, a drop below this 12,259 territory would be needed, just to be a little bit more on the safe side. If you're looking for some higher levels, then probably I would say this is the area to watch, the 12,809 zone, the one that I talked about previously, approximately around there. Not exactly this bang on this level, no, but just approximately around that area. If we do push back above it. Maybe, just maybe, we could see, you know, the EMAs here also aligning themselves with this level, and a whole break of this area could attract more buyers. DXY dollar index, so this one's stalling, so yeah, we didn't really move neither up nor down too much. We're still keeping an eye on those levels, the 109.29 and the 108.08. To be honest, not much to talk about here, just the fact that the same analysis is still valid. So this is what I am keeping an eye on, because in a way, what I want to see here is that will we form something of an ascending triangle pattern here. For that, ideally, I would like to see a heavy drop lower here, move towards that 21-day EMA, then maybe towards this upside line, a rebound, and a push to the upside later on. But again, this is what me wants, this is what I want, but not really, you know, the market doesn't really, you know, do that. So so we just have to try and play with the market in a way. Anyway, long story short, like I said, at the moment I am waiting. I need to see my breakout levels. If it's not really doing anything, then yeah, I'm just observing the price action. Gold, guys, just a quick update. We dropped below the 1728 territory here. I talked about this. So I said that yesterday that if we do drop below that area again, then I'll aim lower. At the moment, I mean, at the moment we saw this drop, and to be honest, I'm going to aim lower right now, and I'm going to aim for this 1711 zone initially, and then I'll take it from there. If we clear that, then yeah, great, we'll go further south. Now, silver, something that I haven't picked up for quite a while, but although gold is kind of, yeah, it's quite interesting as well, very heavily traded, but let's not forget about silver. And here, I want to, before I start drawing any lines, I want to show you this. And basically, what you can see here right now is from around what? So it was like from around January 2021, the commodity has been forming lower highs. Well, actually, there was a moment where it reversed here, I think, yeah, in March this year. It did pop nicely to the upside, and then let's be a little bit more probably honest with ourselves. Maybe from around March, the beginning of March of this year, it started forming these lower highs, and it continues to do so. Lower highs and of course lower lows. Now, as you can see here, we are coming to a very key important area of support around that 18.15 level. So we're not far from this one, but if we start breaking it, guys, well, I mean, this could turn out to be quite ugly for the buyers, and we could see this one drifting further south. Not saying, you know, that this could, you know, fall off the cliff. However, again, at the moment, let's see what's going to happen with this key support zone near the 1815 level. Now, this is what I'm going to park here. I'm going to park here this highlighted territory, and there we go for our future reference. Now, oil. So, okay, this is what I talked about yesterday. I said that, guys, look, I mean, if we were going to start breaking this upside line, I mean, if we were going to suddenly reverse sharply to the downside, and honestly, watch my video yesterday, and this is what I talked about. I said, like, as long as we stay above this upside line, okay, I'll go higher. But if suddenly we reverse below this area and, you know, we fall below this hurdle, because I was making a point about this 95 territory. I said that depending on, of course, how we're gonna trade here, I'm gonna be looking at this 95 zone. But if we fall earlier, for example, like, well, yesterday, then I will keep an eye on this upside line, which got broken. And look at this. I mean, in a way, if we ignored all that, my target has been reached, this 90.58, so just bang on, a good hold up here. So now, to be honest, given the shake-up here that we had, first of all, need to get rid of this upside line, no longer needed. And another thing here to get rid of is this area right there. So yeah, if we are looking for some lower levels, then a drop below this 90.58 territory would be required. Now, again, I'm gonna leave this whole area here and just kind of I'll leave it aside. I mean, if it's gonna continue trading somewhere around here, I'll stay on a little bit on the neutral side because basically I don't like it when it starts oscillating around an EMA or something like that. So yeah, I would prefer to see maybe a drop below this 90.58 zone in order to go lower. For the upside, a 97.65, that would be ideally, or not ideally, that would be the conservative option here. But I would start looking already at some higher levels if we push back above this 95.73 territory. But at the same time, I'll keep an eye on that psychological 95 level. Together with the 208 EMA, if we push back above it, then yeah, great, more buyers could join in. ETC USD, just a quick update. Okay, so if you watch some other analysts online, I mean, everybody's like pouring right now dirt on the crypto world, and to be honest, I don't really blame them because again, this is not really looking very positive. And to be honest, as I said before, I said to you yesterday, and I said that look. It's kind of whenever we have a huge dump like that, like a huge drop, whenever like after we had the 2017-18 rally here, then we entered this calmness for like 2 years or something like that. Didn't really do much, and then after that we spiked higher. So are we getting into this? Well, let's call the the trendy words crypto winters and stuff like that. Are we getting into something like that? Well, I would say be very careful for now. It could be the case, but I need those confirmation breaks. Now, looking at this picture, I'm still kind of leaving probably around maybe 5% of hope that this could bounce off, but in general, I mean, I'm looking at this. This looks very bearish, and yes, I talked about this this kind of range here previously, and we could still keep that on the chart, but let's not also forget probably about this, that we could be seeing here a descending triangle pattern. If that's the case, we just need to see a break through this lower side of this triangle kind of, and then yeah, we could go lower from here. So basically, in other words, a drop below all of the EMAs here would open the door towards lower levels. Now, AUD USD, guys, very quickly jumping into a few pairs before I run out of time. Just a quick reminder, AUD USD, I talked about this potential idea of a head and shoulders pattern. So far it's interesting. We're still respecting that neckline. We haven't broken it yet. So will this end up being a head and shoulders pattern? That's a good question. So that's why you don't rush into all these things here, guys. You wait for that confirmation break, and so far we're not really getting it. So yeah, we're waiting for the upside. I need to see a push above this barrier, the 0.7009, and then I'll go higher. And actually yesterday I talked about this 108 EMA. I said that look, we might see a hold up, or not a hold up, sorry, we could see the 108 EMA approaching this area, and then yeah, we could go from here. A nice good break of this area would place the rate above the 108 EMA and potentially attract more buyers into the game. So long story short, like I said, yeah, the same analysis is valid. In order to go lower, I need to see a drop below this neckline. For the upside, I need to see a push above this 0.7009 level in order to go higher. AUD NZD, guys. So AUD NZD is looking quite interesting here. Basically, everything's according to the plan, because of what I talked about recently. Is said that look, if we rebound from this highlighted territory, good, we'll go higher. And I said to you before, when we were still stuck here, we might see a little retracement. We got that retracement. Okay, great. I said that look, keep an eye on this highlighted territory. We might get a rebound. We got the rebound. Great. Now what? At this point in time, probably I would say yes, it's working out, but I want to be a little bit careful here. I mean, yes, I'm more bullish than bearish. However, if you want to get more comfortable, as you probably understand now, I would like to see a push above this 1.1255 area in order to get more excited with higher levels. That's the current highest point of August, and most likely it might stay the highest point of August. So if we do push through this, then yeah, I'll go further north. Now, AUD JPY, guys, AUD JPY, beautiful, again, beautiful break of this downside line, a beautiful then reversal, rebound from this trampoline, and then we're now pushing back to the upside. I would say I need to see another push above this 95.75 territory, because look, we gotta hold up. We gotta hold up near this area. So if we pop through this, then I'll go to the upside. If we stay below it, I'm gonna remain somewhat on the neutral side. For me to go lower, I would like to see maybe a drop somewhere below this hurdle, this area, somewhere below this 21-day EMA, and then yeah, we're gonna be back below this downside line, and more sellers could join in here. USD JPY, guys, so we got to hold up near this area, and let me just highlight this very quickly, this 139.39. We came very close to it, but we didn't really reach it, so I would say okay, that's fine. That's not a problem. If we're looking for some lower levels here, of course, then in the near term, a drop below this 137.71 territory would be needed for the upside. I still would like to see a push above the 139.39 zone here in order to go, for the upside. So in other words, I am waiting. USD CHF, good move, good run to the upside. Look, I mean, I talked about this pair, and I said that I need to see a nice good push above that 0.9692 level here in order to go higher. And yep, we are now pushing. We've pushed already through that area. We got a nice pop yesterday. So as long as we stay above this 0.9692, I'll remain bullish. If we don't, if we start falling back down here, I will take a neutral approach and just observe the price action. For the downside, I would need to see maybe a drop somewhere below this area, the 0.9578, in order to get comfortable with lower levels. GBP USD, very quickly on that one. So yeah, continues to slide, continues to drift lower. This 1.1639 level got reached perfectly. We're getting a nice rebound. It provided a hold up, and yeah, just to let you know what that level was. I think I need to jump back into the daily chart. Yeah, that's the one. So this 1.1639 zone is the low of the 25th of March of 2020. So yeah, at the moment, like I said, it's going to be quite interesting to see if we can actually rebound from here. But the upside scenario for me, I'm going to take a very conservative approach here and wait for a push above this barrier, this 1.1837, and maybe, just maybe, this could end up being maybe something of a neckline maybe later on, where maybe this is the left shoulder, maybe this is the head, maybe we could form a right shoulder. So either way, if that's the case, for example, I mean, maybe I'm going a little bit way too far here. Let's say if it does reverse back to the upside here, then we could capture this move up until here, up until this 1837 area, something like that. Then maybe a reversal here, and maybe another push higher. But again, that's me maybe trying to fantasize here too much. However, let's see. I would say this way. I'll try to simplify it. As long as we stay below this hurdle, below this 1.1760, I'll continue aiming to the downside. Euro CHF, guys, beautiful move to the upside. I am quite happy about this. This was a very good move here, and yeah, I kept on talking about this last week. I also mentioned, said, look, I need to see a push above the 0.97 territory in order to go higher. Boom, there we go. We had that good move. We also pushed above that 21-day EMA, so everything's looking quite nice here. Okay, so I would say if you're looking for some higher levels, then yeah, the next target is the 0.98 one. So that's what I'm aiming for. 0.98 zone, maybe plus minus here and there a little bit, but overall this area, it's not far from where we are right now, and all is possible. If that gets cleared, guys, yep, my next target is the 0.9955 or this 100-day EMA. And finally, Euro USD. So we are getting a nice push here to the upside, but again the same problem. 1.0032, yep, something like that. Again, this is providing resistance. We did get a nice false breakout yesterday, and then we drifted back down. We're getting a nice breakout today again, and we've drifted back down again. So all this, guys, I mean, this is in a way, it seems to be waiting for something bigger here. Let me just quickly check the news here. We have the ADP non-farm employment number, so yeah, let's see if this is basically waiting for the NFP numbers. Now, this is going to be quite interesting. The NFPs are coming out on Friday, of course. However, I'm trying to look at the calendar to see, what else could be moving here. Maybe like the ADP ADP number, but that's sometimes it's 50-50. Probably the initial jobless claims. That's what's and yes, the ISM manufacturing PMI, of course. That's going to be interesting. That's coming out tomorrow. So if, let's say, we end up trading something like this, then again, remember what I said to you yesterday, that look, I mean, if we have these small bodies of these candles, just if we purely go from the technical side here, we have already, like, for 6 days in a row, we have candles which are with small little bodies here. So eventually that big body will come. So if you are like range trader or a scalper, yes, I mean, if you, or sorry, the other way around, if you like to trade the counter trend, then yeah, that's right now in the last 6 days for you for perfect. But again, don't be surprised if we're either maybe tomorrow or then Friday we get like a huge candle one way or another, and we end up basically trending strongly in one or other direction. So be very careful with that. So try to be on the right side, of course, but if you're not comfortable to trade something like that, then well, it's not a problem just to wait it out and wait for your perfect opportunity to step in. So be smart about it, be careful about it, and just keep that in mind that, let's say, for example, if it starts popping somewhere here, it might end up actually going in that direction for the whole day. So if you are counter trading, then be careful with that, guys. So that's it for this session. I'll have to wrap it up here. Thank you very much for watching and listening. I really appreciate your time, guys, your views, your likes, your comments, everything. I really appreciate that, so thank you very much. If you want to catch me tomorrow morning, as always, in my Traders Espresso, that's 6 o'clock GMT time. For now, have a wonderful trading day. Stay safe, have your stop losses in place, and everything will be fine. Thank you very much, and bye-bye.